What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today on this beautiful Saturday afternoon. So we're going to be looking at some of the top hottest option swing plays going into next week. So if you're ready, let's step right into the war zone. All right. So first and foremost, guys, let me know where you're tuning in from tonight. Shout out to all the Trading Wars Army members. I appreciate all of you being here today. I mean, last week, man, the play was NVIDIA. And I just want to take some time and just walk you guys through how to do this process. Okay. I really want to walk you guys through that. I want to give you the education and the tools that you need in order to succeed. Because at the end of the day, guys, my goal here is to educate you, right? So let's start off. Let's look at an amazing example from last week, and then we'll get into the picks for this week, and we can break it down step by step by step. Okay. So hit me with a one if you guys like that idea. Boom. Adriana, what's going on? Trading Wars Army, Spy VIP, good to see you. Ramon, hey, what's going on, brother? Appreciate you. Jonathan, what's going on, brother? Good to see you. Raju from London. Alicia from Philadelphia, good to see you, Alicia. Chris from Snyder, Texas. Wei from Berthound. Francisco from Arizona. Jonathan from Alexandria, what's going on? Who else do we have in the building? Thank you, guys. All right. Let's do this. So let's start off with NVIDIA, right? Let's do this together. Okay. So first of all, let me show you the results, okay? Because results is all that matters, guys. Boom, surfing trends in the building. What's going on, my brother? Listen, guys, in this industry, results is all that matters. It doesn't matter how many lines you have on your chart. Money is what makes people come to this market. Okay. So this was the home run play from last week. NVIDIA. Okay. So got in at $587, sold at $2,500. Okay. So basically almost a 5 times. So almost 5 times your money. So the question is, how do we get there? How do we get there? Well, it all starts from the higher time frames. It starts from the weekly chart. I'm going to show you guys something today called time frame alignment. So let's go ahead and pop up Trendspider. Okay. All right. So we're going to start off here. I love to use Trendspider and Tradingview, right? Because I get to see things in different ways. So one thing that if we go to the weekly chart here for NVIDIA, and let's look at the weekly chart on Trendspider on both platforms, let's discuss what we see. Okay. The more tools you guys have, the more better decisions you can make, right? But you guys don't have to worry about anything because I'm the one that posts these for you. So you don't even need to do the work. I'm going to do it for you. Okay. Just all you got to do is support me. That's it. So here we go. Let's hit the replay. So coming into this week, we had this weekly doji, right? So the doji, guys, is always means indecision, right? And the reason why, just look at both sides. You have wicks. And the wicks means that when it was up here, somebody sold it down here. When it was up here, somebody bought it up here. So the doji is always an important candle. And then when we went to the Trendspider chart, guys, I did the scan. And I found that we had this blue raindrop doji. And that's very important because if you just look back in this chart, guys, how many dojis do you see here? 1, 2, 3 for the blue raindrop. Very rare pattern. And what it means, guys, is essentially that the volume within this candle is kind of dead in the middle. And that's important because that means that there's people on both sides of this trade that are indecisive. They don't know what's next. Okay. They don't know what's next at all. Boom. Let's shout out to his brother, Ben. Rich, you're changing the way I see trading, brother. I'm still developing my system that fits me, but I know that I'm in great hands learning from you. Thank you, my brother. Appreciate that. All right. So do you guys understand what I mean by this purple, there's a blue doji raindrop? Hit me with the 3 if you're following me. So you see, like the blue means just all we got to say, guys, is indecision. We don't need to make things complicated. So we have indecision here with both platforms. We could see a doji, and then we could see the raindrop is supposed to show us the volume. So we're indecisive. You follow me there? Okay, great. So now what we're going to do here is we're going to take two lines. Okay, so we're going to draw a line here on the top and the bottom of the candle. And we're going to go into the hourly chart now. Okay. And then I'm going to walk you through how I took the trade. So let me pull up the Discord too, just to show everybody. And guys, everything we do is not in hindsight, man. We do it live for the people. Whether we win or lose, it does not matter. What matters is being honest, and what matters is being truthful. Okay, you can win, you can lose. But when I win, guys, you better know that it's going to be like this. And this trade can pay for 5, 10, 15 losers at a time. That's how you trade. Okay, let's go. Next bar comes in, bam. All right, so this is Monday, right? So Monday, let me just ask you guys, what kind of open do you think that is? That like a bearish open or a bullish open? What would you say? Or a neutral open? What do you guys say? What do you guys think? And then while you guys are giving me answers, let's continue. So we have that little bit of a gap down. Okay. And then we have, some pressure on the bottom. Then the next candle comes in, guys, inside bar. All right. So the inside bar is one of our patterns, right? Let me go ahead and pull up our patterns here. So these are our patterns. Okay. It's also outlined in the books. All of my books have the pattern. So let's go ahead and read the inside bar. So it tends to decay option premiums and accumulates trap, bear, and bull traders within a tight range. We tend to see expansion from this tight range with a break above the higher low during the next candle formation. It's a most common pattern. Okay. Now let's go ahead here, guys. Let's play the next candle. Hold on. Okay. Now everything changes here. Everything changes here dramatically because now we have two inside bars. Okay. Is the quality of this okay, guys? Can you see it okay? Because I think someone was saying that they don't really see it well. Can you guys see this? Let me zoom in a little bit. So here is the weekly low, right? And now we have this double inside bar. So we go back to the patterns. You see now double inside power, it's a very rare pattern. And we know that the option premiums, what do you think is happening here? We go sideways, guys. We go sideways for 2 hours. 2 hours. We're going sideways. What's going to happen to the option premiums here? The option premium is going to be increasing or decaying right here. You think you're going to get a good deal? What do you think? You're going to get a good deal on these options? Hit me with a 1 if the premiums are decaying. Hit me with a 2 if they're increasing. What do you guys think? Right? And then this is where we take the trade setup. So what we do here, yes, so we're decaying. So what we're doing here, guys, let's say, all right, we have this tight consolidation. Now we're just going to take the break. We don't have to make it complicated. Let this chart tell us what to do. So if we're going to break down here, if we're going to break this low, all right, let's short. If we're going to break this high, let's go long. Keep it simple, okay? And then let me go here to the midday. So this is the midday option scans that I do every day. I do this now for my members. I just want to show you here. Here was the NVIDIA, right? And then you can see here, fill short on NVIDIA. That was on 18. Okay, see, look right here. Tuesday, January 18th at 11:30. Okay? So from there, guys, we start breaking down. Watch. Bam. So now you're filled. Okay, you're filled. Boom, boom. This push right here, guys, is about 20%. So for anyone that's scalping, you can come and hit these reliably for scalps. But I am a home run trader for options because I have multiple strategies. When I trade shares, triggers, swings, etc., I'll have targets. But when it comes to options, a lot of the times I like to play for bigger home run plays, right? So right here, guys, now we push down, okay? All right, so now the next day we have this movement here, okay? But like I said, for me, I'm a full risk, right? Because I'm playing for the bigger plays. And I know that this is what I'm looking for here. I'm looking for this red line. This is the weekly low. I'm looking for that to break. I want that to break because I know if it breaks that we can flush, right? Because this is where the volume was sitting. So I'm looking here, bam. Okay, see that? See it? Hit me with the 3 if you see that right there. Okay. Then boom, boom, a little bit of a retest, and then we roll over. So Even if you miss these plays, guys, there's always going to be a retest, right? Boom, boom, pull back, bam, most of the time. And then let me just fast forward to the close. There we go. Look at that. It's beautiful. Art, guys. Systematic approaches, no emotions. If NVIDIA broke to the upside, I would have taken it long. Doesn't matter. Follow the plan, follow the system. That's what we do. All right, guys. So generally don't have stops for these. I play for the bigger move. But I'm going to ask you guys right now, how many of you, so what I'm thinking about implementing, guys, is two things. Either a 50% stop loss with the options or a 75% stop loss. So let me take it over to you guys because you guys also trade options. So what do you guys think would be better? A 50% stop loss with options or a 75% stop loss? And the reason why I'm thinking that is this, because if I have a stop loss on the options, I can come in with more money. So instead of risking $1,000 a pop, I can risk $2,000 or $3,000 a pop because I have a stop loss. So let me ask you guys, hit me with a 1. If from your experience, if the 50% stop loss is reliable, hit me with a 2 if a 75% stop loss is reliable, or hit me with a 3 if you think the stop loss just doesn't make sense with options because they move like crazy. So I'm going to be doing some more testing on these and just going to keep sharing it with you guys, see where we get, right? Because look, if we have a 50% stop loss with options and we're making 100 or 200, 300% return, the risk to reward is going to be very much in our favor. Okay. All right. So I see a mix here. So I'm going to go ahead and try all of these options and all of these different stop losses, and we'll see where we get. All right. So there we go, guys. So that's like this is why we do the weekly analysis. Like this is why the whole point of this, me showing you this is why we look at the weekly chart. Okay. All right. So let's get into the picks now. So just hit me with a 4 for the 4 horsemen if you followed me along in that trade, guys. It's not hard at all. This is what we call a drill down, right? This is what we call a drill down. Guys, if you like what you saw right there, buy my drill down book. It's going to come with 1 month for free. So you can come and you can trade with me on Monday so you can apply all of these principles. I don't want to give you a book from the 1940s that's not relevant. I wrote this book less than a year ago. I talk about all these methods. Grab a copy, come trade with me in the room. That's the best I could do to help your education. Okay? All right. We also had some bigger plays, guys, on Facebook and a lot of them this week. So, but we don't have time to go through all of that because we're already 13 minutes in and I need to get through these picks. So let's go ahead. Mastercard weekly. All right. So let's zoom out on Mastercard, guys. Actually, let me start with Procter and Gamble because I just wanted to show you guys something with Procter and Gamble. So here we go. Procter and Gamble, guys. So a lot of the market, a lot of the stocks have been going down. You guys agree with me on that? A lot of the stocks went down last week, but here's something that I traded last week. I traded Procter and Gamble. I traded options on those. And what I noticed is this thing was holding up. It was holding up. So that's what we call relative strength. So if we look at Mastercard on the weekly here, guys, we are still pretty close to the all-time highs. And we've closed with an outside bar. So we've trapped a lot of bears. You see the bears came in here. You could see they pushed down a little bit. They tried to take the weekly low breakdown and they got reversed on. So Procter and Gamble, to me, guys, looks like it has a lot of potential because it's still pretty bullish in a downtrend in the market, okay? And if I go to the hourly chart, let me show you what I did here, okay? So this was on, I believe it's on Monday also. So on Monday, guys, we had earnings, right? And then we had a good, powerful bullish bar followed by an inside bar. So I went long here on Procter and Gamble, guys, and we popped up a lot of times here, guys, for about like 30, 40, 50%. Boom, boom, boom. These moves here, guys, we're paying. And also this holy grail here, guys, I was able to take this one too. So each time, guys, even though we had a little bit of sell-off here, the next day we had that recovery. I'm just looking at this. Compare this to NVIDIA, what we just saw. NVIDIA was making new lows. Procter and Gamble is just holding up. It's holding up, right? So I have eyes on this going into next week with this outside bar in the weekly. If the market wants to continue to push higher, this is one of my top candidates to play calls like I did last week, because it's just showing strength. And obviously a part of it is from the earnings. Okay. So hit me with a 3 if you're following me. This is what we call relative strength. I love looking at this when I do. So when I'm in the room, right, during the midday like this, when I post the picks, guys, I look for the relative strength, right? I look for the relative strength. Which ones? So for example, which ones is moving against the trend? If the market is going down, but Procter and Gamble is going up, that's bullish, right? I'm not saying it's 100%. It's not 100%, but it's good. Say, okay, I want to play my calls on the one that's showing the relative strength. All right. So, and most of the reason, guys, is just earnings, right? Because the investors, the traders, they don't want to let it go down after positive earnings. Next, Mastercard. Mastercard, another one that is not too far from all-time highs, guys. Not at all. A beautiful inside bar, so you know that we had 1 week of consolidation, killing option premiums. So if this one wants to get going, if the market wants to get going, I wouldn't put it past this, guys. In a few weeks, if we turn the corner here and break above this inside bar, we can definitely squeeze into all-time highs. Watching that very, very closely. Okay, so on a scale of 1 to 10, how do you feel about Mastercard? Hit me with a 1 if you think it's a bad setup. Hit me with a 10 if you think it's a great setup. Hit me with somewhere in the middle, depending on how you feel. But I really like this because anything that is still close to the all-time highs is always a chance of a squeeze. And that is one of my go-to strategies over the years. You look for the ones that are close up against those previous all-time highs, because if it wants to get going, guys, we can squeeze out any of these shorts over here. So I see 9s, I see 8s. Okay, great, great. All right, now let's continue. Coca-Cola. Look at this beautiful one. Coca-Cola, guys, right up against the all-time highs right now. Look at this. Okay, if we were to draw a line here on the previous all-time highs, we are pretty much just sitting on that, guys. Okay, nice tight inside bar. Look, the last inside bar we had was down here, guys, which blew the roof off right there. Okay, so now here with Coca-Cola, guys, we are looking to see, this is a relative strength stock. It's up on its all-time highs, whereas other stocks are not. Okay, so same thing. We're going to look at the break of the higher low, or we can drill down. You see what I did on NVIDIA on the hourly chart? You guys see what I did? That's what we call the drill down, drill down, drill down, drill down, drill down method. So what we can do here for Coca-Cola is on Monday, we can go to the hourly chart, and then we can start looking at different trading opportunities. Okay. So hit me with a 4, first of all, if you understand me. Okay. Hit me with a 4, first of all, if you understand me about what I mean by pressing up on all-time highs, etc., etc. Okay, good. Now, on a scale of 1 to 10, what do you think about Coca-Cola? What do you guys think? And you know, guys, this is the way I love to trade. I have scanners. If you join any one of my rooms or you buy my book, you get the scanners for life. Just scan and follow the same strategy every single week. Trust me, that is the best way to trade. Scan, okay, and follow the same patterns every single week. We don't need to have 1 week. We don't need to have a triple Bollinger Band, and then 1 week of Fibonacci, and then 1 week of falling wedge, and then 1 week of this and that. We don't need to do all of that. We can just have one simple way of trading and execute it. Okay, next, Adobe. So Adobe, guys, back to some major support here. Okay, if I draw this rectangle here, you can see this area was a major support right around here. So from here all the way down to here, nice little support box right there. And you can see now we've come all the way down from the all-time highs. We put in a nirvana, right? This is a nirvana inside outside. Then we broke down and now we're back here. So this was the previous all-time highs before the run. And we have a tight inside bar now, looking to retest that. And again, the same strat. We're going to do the same strategy. We'll break above a higher low, or we're going to drill down. And I love going to the hourly and the daily to look for those entries. So on a scale of 1 to 10, how do you guys feel about Adobe? What do you guys think? So what I like about Adobe is, we had a significant drop, right? Like this is what, 30% around, right? So if we drop 30%, guys, and you have to expect at some point someone's going to try to buy the dip. It's the oldest strategy in the book. Someone's going to try to buy the dip, right? So if someone is trying to buy the dip, then there's always an opportunity for you to get cheap option premiums, especially with this 1 week of inside consolidation. Okay. And the same thing goes for the short. Now, if we start breaking through these supports, now look out below, right? Look out below. All right. Kraft Heinz. This one is very interesting, guys, because I love when I find patterns like this. So check this out. The low of the previous week was 36.90, and the exact low of this week was 36.90. Let's see how that looks on a daily chart. You can see this. Okay, so 36.90 right here and 36.90 right here. And it's really interesting that as soon as we touch that price, we just pop up a little bit. And that makes me feel like there's a lot of algorithms watching this. There's a lot of things happening here. And this is what we call a tweezer bottom. This is not a inside bar. This is a tweezer bottom, meaning the exact same low from last week to this week. And I'm really watching Kraft Heinz to see if that 36.90 level breaks, if that's really going to open the floor for a big time drop. Because remember, we had a big run. We had a big run on KHC these last few weeks, and now we have this tweezer bottom pattern. So on a scale of 1 to 10, what do you guys think about this? What do you guys think about this one? Tweezers, extremely rare patterns. Extremely. It is very hard to find those, especially on the weekly chart. So I was happy to find it this week with you guys so we could share it, and hopefully we could get a good move. And I'm watching this one closely because I shorted Kraft Heinz Company, guys, up here. So I mean, I love shorting this one. I took this right here. This is a Ragnarok inside, outside, inside. I shorted it right there in the room. It has been one of the best trades of the year. So hopefully we can catch it again. All right. Next one, Under Armour. So Under Armour here, guys, a nice little tight inside bar, right? Just a nice little chop week. So definitely looking for some cheap premiums here. So watching Under Armour, nothing too fancy, but definitely watching that one going into the next week. So what do you guys think about that one? Hit me with a scale of 1 to 10. What do you think? Then Bristol Myers Squibb, guys. This one, it is, it's traded pretty heavily. Nice inside bar here. Not 100% sure if I want to take it, but I wanted to bring it to your attention. I'm not so sold on it, but I know some people do trade it, so I just wanted to bring it to you guys. So there we go. And then Wolf. I don't know. I literally added this one because the ticker symbol is funny. Petco, right? I mean, look at this. Look at this destruction here. This is absolute destruction. So let's look at Chewy and let's compare this right now. I just want to see. I mean, you guys, I mean, people love their pets, right? Like, what's going on here? What's going on, man? Whew. Is that Chewy? Wow. Damn. So here we go, guys. So these are interesting opportunities for those of you that are believers in these, these companies that service animals, right? Service pets. These are trading at a massive discount right now, right? You could see it. So specifically, Petco has a very tight inside bar. So I want to share this with you guys for a great trading opportunity, but also for you guys who want to be a little bit longer term and you believe in these companies, guys. These are massive discounts, man. Massive, massive discounts. All right. So hit me with on a scale of 1 to 10. What do you guys think? I'll hit SPY right after, guys. I mean, we made so much money on SPY this week. Has been crazy. I want to hit SPY right after. Tomorrow, I'm going to dedicate the Sunday Stock Talk stream specifically to SPY because it's a very critical point in the market. And I'm going to teach you guys how, even if the market is going down, how you can make money. That's what we're going to be looking at tomorrow. All right, so this is a great opportunity for you guys if you guys are interested. Next, Boeing. Boeing, I mean, a lot of people love trading Boeing, so I just wanted to bring this out here. Nice outside bar, okay? So, Boeing, not really my cup of tea, but I want to show you guys outside bar. The last time we had one was here, which was a nice bounce. Like, these outside bars on Boeing seem to produce good moves. Last one, TSM. So TSM, guys, this was probably the ideal situation for anybody that missed it. We had the outside bar last week and now an inside bar this week. So we have the holy grail pattern. Okay, we have the holy grail pattern, guys. A very powerful pattern, really, really powerful pattern, guys. So this one's looking great. So on a scale of 1 to 10, what do you guys think about TSM, Taiwan Semiconductor Manufacturing Company? What do you guys think? And yeah, there is my top picks going into next week, guys. Obviously, I'm going to be day trading SPY every single day. Been really crushing SPY. I mean, taking puts, killing the puts. You have to, guys. It doesn't matter what's going on in the market. You have to adapt. The market's going down, you got to short. If it's going up, you got to go long. Like, it's that simple when you think about it on making money. But the problem is a lot of times people get married to their positions or they get married to their philosophy, right? And let's have a little discussion here. So, how many of you guys feel like that? Like, you should probably try short, but your mind or the people you follow are telling you otherwise, blah blah blah, and then you end up losing a lot of money. Hit me with a 1 if you've ever been in that situation, guys. And I'm going to tell you right now that I've been in that situation throughout my trading career, and that's why I made the decision that I'm going to only trade the bars. Right? I'm only going to trade the bars. So if I have a double inside bar and it breaks the low, I'm going to go short no matter what. If it breaks the high, I'm going to go long no matter what. And this is why I've come to this place in trading for me personally, is because I've been following a lot of gurus and furus for the 7 years that I've been in the game, until eventually the last few years that I gave it all up. And I said, all right, the only thing that's the truth are the bars, because the bars, either they work or they don't work. There's no judgment. You know where your stop loss is, you know where your target is, and that's it. Right? So that's where I've come, guys, and it's a liberating way of trading. And I wanted to share that with you, my friends, because I don't want you to get into the trap of being in this biased type of trading where you cannot adapt. And I'm going to share with you guys a few things here, man. So, I called out this weekly outside bar on SPY, right? And I don't know how much of you actually follow me, but we were able to capitalize big time on this push down here, guys. You can see it. I mean, it's a simple pattern, guys. Like, we don't have to come up with all these analytics and all this bullshit to call tops and bottoms. We keep it very simple. We have an outside bar that broke into new all-time highs. We trapped a lot of traders. What do you think is going to happen? We have a doji the next week, and then after that, we break the low and we flush. Very, very simple. That's it, guys. We see the bar, we trade the bar. We don't need to come up with 105 different narratives to please the crowd. We see the bar, we trade the bar, right? So tomorrow, guys, I am dedicating the whole Sunday Stock Talk to trading SPY. There was exceptional moves here, guys. And like, I know some of you guys might not believe this, guys, but look, the same strategies that we're doing on NVIDIA, just watch this closely with me now, okay? This week on SPY, guys, we had this hourly inside bar. Look at this, twice, giving you signals that, hey, all right, the market is consolidating after this push. Let's look for the break. And look, each time we broke the low, we flushed. We broke the low, we flushed. It could be that simple if you want it to be, guys. It really can be. But you have to make the decision that you are not going to let other people influence you, and you're going to follow your system and your rules. And everybody was banking this week, guys. I mean, it was just really, really clean. So tomorrow, let me dedicate the whole stream to that, because I can just give you guys some more guidance. And, even look at these plays up here, guys. Little inside bars, you try them, you risk 1 bar, but look at the reward. I mean, look at the reward on this, man. Let's just say this, okay? I know some people took this. Personally, I didn't, because I was all over NVIDIA this week. But check this out here. You take a short here, right? Put your stop at the high. Okay? That's it. You take this short, guys. Let's just say you hold it into this close, just hypothetically. Okay? That is 57 times your money. You don't need to trade for the rest of the year. That's it. And I'm just trying to show you just simple trading patterns, guys. The inside bar, take the bar, it breaks down. That's it. I mean, it does not need to be more complicated than that. All right. So there we go. Thank you very much for your time, my friends. I appreciate you. We're gonna be streaming tomorrow, and I'm gonna end the broadcast here. And I just want to ask you guys right now, um, please comment. I'm gonna end the broadcast right now. Please comment at the end of the video what you're looking for in SPY. Like, I see a lot of people asking about SPY, but what are you looking for? Day trades, swing trades, investing opportunities? What is it specifically, so we can cater the video to what you guys need? All right, because I'm gonna tell you guys something right now. If you're not taking advantage of these shorting plays, and you're just like hoping that your long-term investment is going to just work, you have a recipe for disaster. Because your day trades, guys, your day trading opportunities must be a hedge to your longer term positions. It must be, because you need to protect yourself when the market goes down, guys. You need to protect yourself, and you need to be able to take these opportunities, guys. All right. So I'm going to go through a detailed recap on SPY tomorrow, and we're going to go from there. So guys, check me out, tradingwars.com. If you want to learn about the swing method I just talked about, grab the drill down book. Comes with 1 month for free. Or if you want to be hedging your long-term portfolios, you want to trade the puts and SPY, grab the SPY book, guys, and come and trade with us. You get 1 month for free. That is the best way. I designed everything that I do thinking about, if I just came to trading 6 years ago, what would I want? And it would be this: a book that has a guidelines with 1 month for free, that I can trade alongside people that trade every single day, so that I can get better. That is why I do what I do. I made it in this way. Okay, guys, for that purpose. So let's go ahead, and I'll see you tomorrow. And make sure you comment. Let me know what specifically: day trades, swing trades, long term. Let's see what we do. Okay. Let's just answer this question for this brother here. What expiration for SPYs or longer dated? What strike price? What expiration for SPY? 0 dates expire or longer dated. What strike price? Well, it depends if you're day trading or swing trading. If you're day trading, you can use 0 days to expire, but you have to understand that it's going to be a full risk trade. Okay. And the strike is always 1 strike out of the money. That's it. Very simple. If you're swing trading, then you want to I personally get like 2 weeks out minimum. Okay. But if you're on something like this here, this weekly chart right here, guys, at least 2 weeks or more. Okay. If you're on the daily, I still like to do 2 weeks. If you're on a 5-minute chart day trading, you can do 0 days to expire. It's just more risk, more reward. Okay. All right. Thank you very much for your time, guys. Take care.